The collapse of China may have just begun. And all the financial drama with Chinese Evergrande is heating back up again as Evergrande just filed for Chapter 15 bankruptcy in New York. They've been trying to put together a debt restructuring plan for months, but they don't have the level of creditor support they need. Recently, hedge funds have begun to dump Chinese stocks aggressively. Funds like BlackRock, Alliance are looking much more negatively at the economic prospects of China into the future. Even banks like JP Morgan slashing their China growth forecasts. If you don't know who I am, my name is Joe Brown. I run Heresy Financial University, where I teach active investors how to get higher returns with less risk on their portfolios by learning how markets actually work. If you'd like to join, consider becoming a member. Link is in the description below. And in case you're thinking this is no big deal, well, apparently China thinks it's a big deal because China has just asked some funds to avoid net equity sales because their markets have been sinking, testing this year's lows. Now, this is obviously a sharp contrast with recent history the last few years, and especially the last few decades, as money has been flowing in to China because of the growth. So what is changing and why is it changing so suddenly? Well, one recent catalyst is a financial institution in China's shadow banking system missing dozens of its dollar debt payments. So severe that there are even protests in Beijing right now, which is, I'm sure you're aware, in a command and control top-down communist economy like China, something like protests are rare. But you can only back a tiger into a corner so far before it is forced to attack. Obviously, this is triggering a lot of fear among Chinese investors, sparking renewed calls for more aggressive easing, especially considering this is putting more downward pressure on home prices in China. Now, if you're not aware, home prices in China are a big deal because it's basically the only investment available to the average citizen. Here in the United States and overall in the West, there are many more options and choices for investing and saving. We obviously have the stock market, we have very liquid bond markets, we have savings accounts, money market funds, we even have private investments and private businesses that anybody can invest in. Not to mention the tax benefits built into the system for investing in things like real estate or investing in retirement accounts like 401ks and IRAs. The West, and especially America, is built for investors, which makes sense. That's why it's called capitalism. But in China, they don't have as deep or as liquid or as many choices of markets to invest in, meaning the only thing that many people invest in and save for the future is real estate. But first, a word from today's sponsor, I Trust Capital. Investors today face all sorts of new and unique risks. Invest in stocks and risk a stock market crash. Invest in bonds and watch the value of those bonds drop as interest rates rise. Keep your money in cash and watch inflation eat away your purchasing power. Invest in crypto and watch frauds like Sam Bankman-Fried steal all your money. This has many investors looking to alternative stores of value like gold and Bitcoin. The problem with this is that most investors are not able to access gold and Bitcoin. This is because most people have most of their assets tied up in their retirement accounts. And most retirement accounts do not allow you access to things like gold or silver or Bitcoin. This is where I Trust Capital comes in. I Trust Capital allows you to open up a new retirement account or even transfer an existing retirement account. Then you can purchase alternative stores of value with your retirement like gold, silver, and Bitcoin. In days like this where fraudulent platforms like FTX are collapsing and traditional banks like Silicon Valley Bank are failing from bank runs, I Trust Capital is still going strong because they do things the right way. You own your assets there. Your assets are always held off balance sheet and your accounts are never commingled with theirs. They partner with industry leaders like Kitco for their precious metals. And they're straightforward about how they keep your assets separate and safe. And if you use my link in the description below, you will get $100 worth of Bitcoin just for signing up. This has led to the rise of ghost cities all over China, where you have buildings upon buildings of high rises and houses, yet absolutely nobody is living there. many of which were built incorrectly and then had to be knocked over and destroyed as a result. This is the peak of malinvestment and misallocation of resources that happens in a top-down command and control communist country, which means that the booming real estate market for years that many people were putting their entire life's savings into is nothing but a hot air balloon. This is forcing China to dig into its monetary policy tool bag to try and fix things from the top down yet again. And over the last week, the People's Bank of China, their central bank, injected the largest amount of short-term cash since February. And this comes just one day after it cut interest rates. This is forcing the Chinese yuan to move lower and lower, and it is on the verge of a major breakdown after years of being devalued versus the dollar. Even so, it looks like that may not even be enough. You see, the amount of easing that a central bank can do is proportional with how strong its currency is. This is as true with China as it is with the US, and we've seen the Federal Reserve come up against the same roadblocks at certain times. If you're cutting interest rates and printing money, that by definition means the money is going to be less valuable. Now, the goal by central bankers is that pushes prices up. But when you're an economy that still needs to get US dollars for much international trade, it is a dangerous thing to see your currency look like it's about to fall off of a cliff versus the dollar. Now, they have a solution for this, which I'm going to touch on towards the end of this video. But before we get to seeing them implement this solution, I think we see more problems first. This is because the weaker the Chinese economy gets, the closer we actually are to seeing China invade Taiwan. China has stated it will absolutely see reunification by 2049 and said that any move towards independence by Taiwan would be an act of war. But China right now is headed off of a cliff. And if it starts to see how weak it may become in the near future, 5-10 years down the road, it may realize that that reunification will be impossible unless they make it happen now. Now, this is nothing new. While a lot of the data that we're looking at shows how everything is starting to pop up and these problems are starting to show their ugly faces right now, these are long-term trends that are just now coming to the surface. Pressures that have been building underneath the surface for a long time, that China is just now starting to reap the consequences of what it has been sowing. One of these is the problem with the productivity and the unemployment crisis they have, specifically with young people. The unemployment rate in China is starting to move aggressively higher. And of course, as communists do, instead of trying to fix the problem, they are just moving to hide the data from the rest of the world. Specifically, the youth in China have a jobless rate that continues to move higher year after year, with the urban youth unemployment rate for ages 16 through 24 at a staggering 21%. And those are the official numbers, which are likely even better than what the reality is, considering that in China, it is a growing trend for college students to fake their job certificates just so that they can get their degrees. Now, this youth unemployment problem by itself would be a massive deal, but considering the fact that the youth in China are disproportionately small compared to the older population that they are more and more having to support. This is the ingredients for an economic collapse. The median age in China right now is 39 years old. And this trend of an aging population is not slowing down anytime soon. This is because the birth rate in China has absolutely collapsed and fallen off a cliff. By the way, guys, I'm going to be speaking at the Stock Pulse Silver Symposium about the history and future of sound money. It's in Las Vegas from September 29th through October 1st. There's going to be a ton of other great speakers there. There are going to be plenty of opportunities for us to do meet and greet, hang out, get some drinks together. I would love to meet you there. And everybody who shows up is going to get 1 ounce of silver as well, a 1 ounce silver coin. So I'd love to see you there. There's a discount link, 10% off in the description below. So sign up there, get that discount, and tickets are running out, so sign up soon. This chart from Visual Capitalist shows a demonstration of what the population in China has done over the past couple of decades. And it used to be very healthy, but due to the disastrous consequences of the one-child policy by the communists in China, we can see they now now have a completely inverted population pyramid, and very soon that will lead to a population collapse, as their population will dwindle, as the young people will not be able to afford to keep the older population alive. This will lead to a population implosion and economic collapse in China. Now, earlier I said there was going to be a solution that China would try, and this will be a short-term measure that China will use, specifically because of the yield gap difference between US debt and China debt right now, which is at its highest it's been in 16 years. It is well known that China is one of the largest holders of US treasuries. In other words, they're one of the largest lenders to the United States government. But after the financial crisis, when China realized that the United States would never normalize its balance sheet and the Federal Reserve would never be able to sustainably tighten, China became a net seller of treasuries and has been slowly reducing their holdings. In 2013, China's holdings of US treasuries peaked at 1.3 trillion and has been on the decline since then. But recently, within just the last year, their holdings have fallen off of a cliff. They are now at a 14-year low of US treasury holdings and have been selling treasuries for 3 months in a row as of June. Considering their currency, the yuan, is falling off of a cliff right now, and that they will continue to have to ease if they want to provide support to their economy, they have little choice but to continue to sell these treasuries. It's obvious that would push the prices of US treasuries down as you have another large seller become more aggressive in selling, which is going to push interest rates on US debt much higher. And yields on US treasuries are already primed for a major breakout. Now, given the fact that this would mean they very well could be selling these assets at a discount to what they purchased them at, they'd be taking a hit, is probably not their first choice. But given all the problems that are coming to the surface right now and the momentum of decades that they have building pressure under the surface, China may have no other choice. This could obviously lead to knock-on effects in global markets around the world, especially in the US, as borrowing gets much more expensive, but that's a video for another time. Now, if you'd like to join me and be able to look at situations like this as an opportunity to profit rather than be scared that they're going to make my portfolio take a huge hit, consider becoming a member of Heresy Financial University, where I teach active investors how to get higher returns with less risk by understanding how market cycles work. Linked in the description below. As always, thanks so much for watching. Have a great day.